Alright, welcome back to the middle of the range, like we never left, because we have never left this range. We've been trading within this range for quite some time now. Everyone is kind of panicking between we're so back, we're so over, but we're in the exact same kind of trading region that we've been for the past couple of weeks or so. Obviously had that, big dump from the top of the resistance box, never managed to get above that, but we're still kind of ping-ponging between it's over, we're kind of back, it's over, we're back, it's over, we're back, it's over. Recently, we were at we're so back, and right now we're at we're so over once again. But if you kind of just take a second to zoom out and look at the monthly time frame, you can see not an awful lot has happened so far on the monthly candle and on this weekly candle. The monthly candle is up approximately 1% as of the time of recording this. The weekly time frame is up approximately 1% as of the time of recording this. And kind of in all seriousness, just very, very simply, because this video is probably going to be quite short, on the weekly, we had a nice move back up to the top of the range. We had a nice move back down, kind of testing some of these important kind of macro trend lines, making sure that there's still support. And that's pretty much all that's happened. Nothing has really happened of any significance throughout this week. And for the past few weeks or so, we've been trading within, if we come over to the daily over here, you can see we've been trading within this range for the past couple of weeks or so, and not an awful lot has happened. We were previously kind of ping-ponging between this zone for a long period of time. We broke down, and we're just establishing a new range at this moment in time. There's honestly not an awful lot of exciting developments to talk about right now. We're just figuring out where we're going from here. We've gone from the bottom to the top, bottom, top, bottom, and now we're kind of trading around the heart line where kind of all of the volume has been traded around this market previously. So for this week in particular, we're still up a tiny bit, but yeah, we're kind of in the exact same situation. We're trading around where the majority of the volume has previously been traded around this range, and until we break either, if we come to the daily time frame, until we break kind of 90k to the upside of this range, or unless we break beneath kind of 81k and start coming back down for these lows around about 76, then nothing's changed, and I wouldn't really get out of bed while we're just ping-ponging around this range. Remember, a lot of people are panicking, a lot of people are switching emotions up, down, up, down, up, down. When in doubt, zoom out. We're trading within the same range. We haven't made a decision. Absolutely nothing's happened this week. So I'd really just be keeping your eyes on the black and white charts and making sure that, while we're beneath resistance, while we're above support, you're not panicking, you're not jumping between euphoria and fear, like pretty much every crypto trader is doing at this moment in time who's barely been in this market for too long. So for myself personally, really still kind of very neutral from what I've been talking about the past couple of videos. For me, nothing's changed. We're neutral. We kind of toyed with the idea of potentially Bitcoin firing a super bullish long signal. That's still kind of on the cards for maybe next week or the week after. We have yet to sin a daily close above the 50 TMA, which is what I'm waiting for. Once again, we talked about that trading strategy in the last video. We're still waiting for that to happen. But yeah, again, we're being smushed between the 90k resistance and the 81k support. We kind of found the 76k leg to the downside over here. We pushed up, and ever since then we've been holding this kind of 81k region, refusing to close beneath it, and even having wicks down and sharply getting bought back up to kind of around the heart line, 82 to 83,000. So that's pretty much what we're looking at right now. Once again, weekly, monthly is up. Absolutely nothing has really changed of any significance on this week. But of course, the talk of the town right now is the economic uncertainty, currently at all-time highs on the Economic Policy Uncertainty Index. And a lot of this came from the other day on Liberation Day, where Trump announced all of these reciprocal tariffs. China's reciprocal tariffs up to 34%, European Union 20%, Vietnam 46%, Taiwan 32%, Japan 24%, India 26%, South Korea 25%, Thailand 36%, Switzerland 31%, Indonesia 32%. Quite an important one as well, the UK up to 10%. So there's a whole list of these tariffs that are kind of coming out. I can't remember exactly how many countries. I think it was a list of around 200 countries, where all of these countries, basically, if you don't know how this is currently being operated, these aren't kind of tariffs for the sake of it. These are reciprocal tariffs. So prior to Trump coming in office under the Biden administration, China had tariffs on the US up to 67%. The EU had tariffs up to 39%. I believe 20% of this is VAT, which is just standard. If you live in the EU, you kind of know that that's attached to everything they do. On top of that, there's another 19% tariff, which gets directly transposed over to the US. Vietnam, 90%. You know, all of these huge tariffs. It's not like Trump is kind of starting a tariff war. All of these tariffs have been in play against the US prior to Trump coming into office. And what Trump's doing is saying, okay, if China wants to tariff us 67% on our goods, then we're going to tariff them, you know, half of that, 34%. So it's trying to even the playing field with these tariffs. It's not like these are kind of, you know, brutal attacks which are, you know, for no reason. These are reciprocal. One country said, hey, we're going to tariff the US. The US is just saying, hey, we're going to tariff you back probably half that amount, which is pretty much what all of these are. You can see Vietnam, 90% tariffs. They're only doing 46% back. China, 67%. US is only doing 34% back. But we've seen an interesting development as well, where since Trump has come out with this news, which kind of created far more economic uncertainty about kind of retaliations and trade wars and where things are going to go from here. When the US introduced that 34% tariff, you can see China came right back out and said, hey, if you're going to, you know, even though we're doing 67% tariff on you, if you bring that 34% tariff to us, we're just going to add another 34% on top of that. So there's a lot of uncertainty right now, and you can see this bleed into the S&P 500. There is major uncertainty about a trade war going on at this moment in time. And what's super interesting is Bitcoin is actually holding up a lot better against the S&P 500 right now. And I think this can kind of tie into the same story as gold and the economic policy uncertainty index. Is right now, economic uncertainty is at all-time highs. The S&P 500 is not proving to be a hedge against that uncertainty. But what is proving to be a hedge, which we'll talk about in just one second, is gold. You can see, and there's an argument as well, S&P 500 on the weekly time frame. Look at the Fibonacci from the low to the high. The S&P 500 got all the way up to the 2 extension. If you didn't know, the S&P 500 has been outperforming Bitcoin, which is absolutely insane. If we come over to the weekly time frame for Bitcoin and draw from the high to the low, you can see Bitcoin only kind of really got up to the 1.618. It didn't manage to get up to this level, and now it's kind of sitting around and holding the 1.236. It's been at this level for quite some time, but the S&P 500 has been very overextended up at the 2 extension, and now it's only just coming down to the 1.236. So at this moment in time, Bitcoin's holding up a lot better, but what's proving to be kind of a hedge against this economic uncertainty is gold. Ignore these drawings. These are from absolutely ages ago. I haven't brought up a kind of gold chart in a very long time. If we come over to the monthly time frame, you can see we drew this cup and handle. God knows when we drew this. We probably drew this a while ago. Actually, we talked about this recently and how there's a fractal over on Bitcoin which emulates this exactly. Gold is breaking out from this cup and handle pattern, shooting to the upside. Gold is really proving as a hedge against this economic uncertainty right now, while the S&P 500 crashes. And Bitcoin's not doing all that bad. Again, like I've been saying, a lot of traders, especially in crypto, have some crazy recency bias. And to be honest, the best way I can say it with kind of no filter is a lot of you crypto guys are retarded, and you have short-term memory loss, and you don't really remember that we're just kind of trading within a range, and a whole lot of nothing is going on in this range. Weekly time frame, absolutely nothing's changed. Monthly time frame, nothing's changed. We've got like a doji candle. We went up, we went down. We're at the exact same price. But crypto guys are just like, oh no, it's over. Oh, it's so back. Oh no, it's over. Oh, we're so back. Like, you know, in general, if you're following a lot of kind of retail sentiment, you're probably just going to kind of catch the retarded virus from a lot of these crypto traders. But if you're just kind of looking at things sensibly and just saying, okay, we're in a range, nothing's changed. We could get a long signal. If we get a close above the 50 TMA, that would be a really bullish signal. Until that happens, then there's not really anything I'm going to be doing with my trades. Until we get above kind of the 89 to 90k resistance, you know, we're still within this range. Unless we break beneath this 81k support, nothing's changed. And a lot of people don't appreciate that. A lot of people are very, very short-term memory. So make sure that you're not one of those people in this market. Make sure that you're just looking at the charts for what they are. Understand for the past few weeks we've done absolutely nothing, and in the higher time frames as well, this is what we're doing. This week, this month, completely flat. Nothing's changed. Don't let your bias change. You know, all we've really done is spike up a little bit, hit some resistance. We came back down to test some support, and with the same price. So we're going to have to see how things tie into the next couple of weeks or so. But Bitcoin still sitting at a key area of support, despite the fact that the S&P 500 has kind of crashed through its level of support. And here's something interesting. If we come over to the 4-hour time frame, you can see another much cleaner way of just picturizing this range that we're trading in. This is what Bitcoin's doing right now. This is what you've been seeing, where sentiment's gone from bearish, bullish, bearish, bullish, bearish, bullish. Kind of a lot of whiplash that's been happening the past 2 weeks or so, despite the fact we're in the heartline, we're trading at the exact same price. But you can see for the S&P 500, this line chart, so it's a little bit ugly. I don't think we can change. Let's bring this over to a candle chart. Okay, yeah, no, that actually looks horrible. Let's just bring it back. Let's bring it back to a line chart. You can see over here, the S&P 500 was trading within that same range, pretty much the same as what Bitcoin was doing, but the S&P 500 has started to plummet from this range. Bitcoin's still holding up very, very strong. So this could be a hedge. Potentially Bitcoin could follow if the S&P 500 tanks too much more. But with all the kind of economic uncertainty going on at this moment in time, people seeming to flock into gold, Bitcoin's kind of already had the sell-off. It's sitting at support. Potentially, this is what we're looking at. Potentially, this is as far as Bitcoin wants to go to the downside. And when the S&P 500 does hit that floor that it wants to bounce from, then potentially that could mean that Bitcoin could be having a recovery prior and following the S&P 500, and it could be very, very nice. So yeah, looking at the S&P 500, it's coming down to the same Fibonacci that Bitcoin's holding, the 1.236. This is really a disgusting candle down. I'm honestly fairly certain that next week we're going to have a huge, huge green candle back up, even if it is a dead cat bounce. So expect kind of the markets to surge next week, is my personal opinion, from the 1.236. I think 5,130, probably somewhere around here, the S&P 500 will stall out at, and then probably push back to the upside. But Bitcoin really holding up extremely well against the S&P 500 right now. All in all, we're still in the same range. Nothing's changed despite the kind of whiplash up, down, up, down, up, down that we're seeing. Here's another way to look at it on the weekly time frame. We were trading within this range, we broke back down, and now we're just trading within a new range. And until we take out the lows, until we take out the highs, or for myself personally, where I'm looking to kind of enter another long position, is I want to see us get above this 50 TMA. I want to see us get a daily close, and until we get a daily close, there's not an awful lot to talk about. So that's pretty much all we've got for this video. Solana in particular, just quickly wrapping up on this one, we did break beneath the floorboards around about that $120 to $130 support level that we talked about in prior videos. We have come down to the next level of support that we talked about between 115 and 110. Kind of the best case scenario here is that Bitcoin could see potentially a bounce either over the weekend or coming into Monday, when the S&P 500 is likely to find a bottom and have kind of a resurgence back to the upside. And that could mean potentially you know, what I'm hoping for is the bottom is in for Solana around about $110. Worst case scenario, probably the next level of support between $100 psychological level and kind of around about $98. Some serious support over here. We'll keep on talking about this, but next level of support to the downside going to be around about 85. Next level from there, 75. Next level from there, 50. Just giving you the areas to keep your eyes on. I personally think that somewhere around here where we are right now is going to be the bottom. We also had some kind of news come out that the SEC has acknowledged that Fidelity's spot Solana ETF exists. A lot of the time these get revised, so it doesn't mean that it's going to get approved tomorrow. Probably what's going to happen is they're going to ask for numerous drafts, numerous things to be updated before it comes through, so it might take a while for the spot ETF, which is what we really want, to actually come out for Solana. But all in all, ladies and gentlemen, we're in the same range. Keep your eyes on daily closes above 86,000. That could fire a long signal on the TMA. Once again, we talked about this before. If that does happen, we'll make a video. But really, kind of outside of that, what you want to see is a break of the range. We want to see closes above kind of 89 to 90,000. Or if you think things are going lower, or you know, if you just want clarity on what we'd need to see to break lower, you'd need to see closes beneath 81,150. Until we get that kind of price action, until we get some confirmation that we're either breaking the lows or breaking the highs, all we're doing is ranging right now. So it's kind of boring. That's pretty much what it is. We're looking at the same charts, we're saying the same things because, you know, nothing has changed. So until we get done ranging sideways, not a whole awful lot to talk about. So we'll update you when there's something more significant happening. We'll update you. Of course, you know what I want to see for a long anyway, close above the 50 TMA. If we do, again, push back above the 50 TMA, I'll make a re-update and let you know, once again, at this specific price, we want to see this. Or if we break beneath, we'll say, you know, if we break beneath this and close beneath this, then we'll see this. So until we break the range, not a whole lot to talk about. Just don't be one of those retards who get suckered into fear, euphoria, fear, euphoria, fear, euphoria when we're just trading sideways. So turn notifications on, see you in the next one. If you want to keep up to date with extra charts outside of the videos, be sure to follow me over on Twitter at 618_cowboy. Turn notifications on if you enjoyed the video, smash like, leave a comment. See you in the next one. I'm out. Peace.